Welcome to the Industrial IoT Spotlight, your number one spot for insight from industrial IoT thought leaders who are transforming businesses today. With your host, Eric Walenza.
Welcome back to the Industrial IoT Spotlight. I'm joined today by Chirayu Wadka. Chirayu is a partner with SeedPlus and Jungle Ventures. SeedPlus invests in deep technology startups out of Asia. They're based in Singapore, and Chirayu focuses on devices, IoT, network infrastructure, operating systems, Industry 4.0, basically everything that we like to dig into on the Industrial IoT Spotlight. Chirayu, before we kick off and talk more about SeedPlus and Jungle Ventures and then around VC investment in general, give us a quick overview of your background. Where are you coming from? How did you end up with SeedPlus? And why are we talking about this topic with you today?
Thanks for having me on podcast. I think I really appreciate it. I've had the opportunity to listen to some of your past work, and it's been very fascinating and to hear views of the different entities in the ecosystem. My background here is that I never thought I would be investing in Asia, but the way it kind of really happened was I was at Google before this doing some stuff around hardware, launching some of the at-home router products and some of the IoT products that they had. And, I had some folks out of Asia who I knew for a very long time who thought I could be more helpful in this part of the world because of what's going on here, and asked me to sort of come and help them set this up, an early stage venture fund that focused on deep technology, based out of Singapore and focused on Asia. So I think that's really how it came about. And I had the opportunity to look at the numbers coming out of Asia as a part of my job at Google. And it was fascinating to see how things had significantly moved forward in a shorter time frame than you can imagine. So that's what attracted me as sort of back to Asia in some sense. And the opportunity to leapfrog was definitely there because the existing infrastructure doesn't exist. So you need to sort of create something that is completely new and fresh. And that opportunity was quite exciting.
What's the ecosystem like in Singapore? I mean, I know that the government has a very strong smart city initiative, but some of the feedback I've gotten from people is that it can be very government driven. So it's professional, well executed, but that it is centrally oriented, which is quite different from the West often. What's your experience of the development of the ecosystem in Singapore and then more generally in Southeast Asia?
So if one were to sort of put on their hat and say infrastructure is everything that then yes, I would say that it's still sort of central government control, top down, but a lot of bottom up in stuff is going on. So an example would be some of the biking companies, and coming out of China, I'm sure you think, man, a lot of them are going down, and the economics don't work. But the reality is, if you look at IoT networks and smart cities, these are possibly the most dense IoT networks out there. Every bike is enabled, right? So we're seeing use cases that are bottoms up, that did not exist before, and the government is not sort of coming down heavily on it. In fact, they're enabling it and ensuring that bottoms up innovation sort of goes with top down innovation. So I think if one were to sort of put on a hat of what's best for citizens or users, I think you would see that things have significantly moved on from a government mandated top down policy based approach to sort of an open innovation and a balanced approach.
We working for a client, which is a multinational. We recently introduced them to a Singaporean company, and doing this project, we saw there's actually quite a few interesting companies coming out of Singapore, and it's a great testing ground because it's kind of a contained, relatively mature market. It's not huge, but the companies are relatively willing. They're less price sensitive, relatively willing to experiment with new technologies. So I think interesting place to be based. Chirayu, let's start with the money. Where does your funding come from?
We have been backed by some of Asia's and the world's top institutions. So we only have institutional backing. If you look at our LPs, it's the World Bank, Fidelity, Cisco, the Singapore government, Axel partners. Jungle Ventures is one of the biggest backers, as you may imagine. And then we also have some backing from Tata Communications Limited. So it's a mix between local VCs, international venture capital funds, and financial institutions, and corporations with an interest in deep technology. So it's a combination. We For this fund, we haven't really gone ahead and taken money from individuals. We've kind of avoided that.
Gotcha. But you're kind of covering the spectrum from local to global corporations, government, and then NGOs. So quite interesting range of investors who are interested in IoT in Southeast Asia. SeedPlus, my understanding is you don't just cover IoT, right? IoT is your personal focus.
Correct. So we do everything that's deep tech and everything that is product differentiation led, because historically this has been an area of less focus in this part of the world. People have used what's off the shelf, put that together, and done technology enabled plays. I think we are moving towards a world of technology led plays where product differentiation is going to lead the way. And we think technology is core to any product differentiation. So our view of the world is that we think that that's where the market's going, and we are investing in probably what would become larger companies in the future. At least our hope is on the back of technology differentiation. We have a few teams, and we've invested across those. So there's applied machine learning. We've done, obviously, personally look at IoT and related areas. We've done enterprise tools, including security and some SaaS tools. We like to see the future of workforce being addressed, because with the changing sort of nature of workforce, more temp and workforce is coming into action. A few applications will become more relevant. And then we've got stuff around fintech. Given it's Singapore, we can't sort of ignore that area. Fintech includes sort of blockchain and everything else. So we've covered four or five themes across the fund. But again, has to be some differentiation that's led by product. Otherwise, we are less keen to look at it. A penetration or marketing led approach works, but we feel that it's probably not the place where we want to place our bets.
Why is this so important to you guys? Why do you think this is, for you in particular, a really important criteria for a company?
Yeah, I think what happens is we've seen that the first wave of startups was on the basis of taking what's out there and just sort of putting it together and building out. But increasingly, we are seeing companies and entrepreneurs who have a focus on building something that's differentiated. But they have found themselves either lacking a partner in the market or not having group of investors who understood what they were building and helping them build that out at a fundamental level, both at a product strategy level as well as a business level, and translating some of that technology into sort of commercial outcomes. And it almost felt like there was a sort of white space that we could occupy. And we've kind of gone and occupied that white space. And there are, I would say, the market's been picked up since we started this, and there've been a lot of investors and angels that have come forward and supported deep tech. But I think we find ourselves in a unique spot where we are willing to bets on companies that we are convinced about, and bets that are larger in size versus investments that are 200-300K, which tend to happen in the deep tech space, but really don't deliver outcomes, because, as you know, in technology, you need to hire those engineers that don't come for very cheap, and you need to give them enough time and runway to build something after pivoting a couple of times, which is sort of inherent in technology led businesses. So I think that's why we felt that this was a need that we needed to fill, and a gap that we could fill with the approach that we have.
I want to dig into, beyond venture funding, how you work with companies. But before we get there, let's just dwell on the financial aspect of it. So you said you do larger investments. What does a typical investment look like for you?
A typical investment is anywhere between $500,000 to $1 million US. So we typically are the first institutional check in any company. At least that's what we like to do. We've done investments where we've shared the investment with other funds, but that's not our typical style. We rather own a large piece of the company. If you look at the four partners running Seed Plus, you would see that all of us have operating backgrounds, and that's by design. I think one of the hypotheses that we had is that we just don't want to go in and give money to the company. We want to go in with conviction, go long on the company, and have a more concentrated set of investments, and use our operating experience from the past and offer it up to entrepreneurs to help them get to better outcomes. And we've kind of hiring people from the operational side of the fence really helps in sort of forwarding that agenda of being useful beyond just capital. And I know a lot of people talk about being operationally useful to their companies, but we've kind of gone ahead and hired people with exactly that background alone, and that kind of tells you our commitment to solving that challenge that a lot of the companies in Asia face, because the ecosystem is a little more fresh and new, and there's not enough of a generational knowledge that has existed in Bali, for example.
Yeah, and I was looking at the profiles of some of the guys that you have on your team. I think you've got people that have good experience building up kind of go-to-market plans, entering new markets, and so forth. What do you think are the most valuable things that kind of an operationally focused VC like Seed Plus is able to bring to the table? Like, what are the real pain points or the potential kind of valleys that you're able to help your portfolio companies cross?
So I think there are two sets, right? I think you can divide the world into two parts. So one is sort of functionally driven help. So if I were to sort of look at a company that needs help with respect to technology scaling, ensure they don't accumulate technical debt along the way, and make the right technology choices in terms of the kind of systems they're betting on for scale or for the long term, and then also day-to-day sort of product decisions, then I would say you need to sort of get that narrow help. I think there's another piece of it, which is being sort of immersed in the company that you're helping. It goes beyond the narrow functional help that we can provide, and really go to one of the four or all of the above, right? It could be help the company raise money. In the later stage of the game, it also means helping the company perhaps go through an M&A process, and they're getting acquired or they're looking for suitors or partnerships. It could be hiring and leadership development, so hiring the right folks. And lastly, it could be just sort of operationally helping the company increase its revenues or top line. I think these are the four areas that I would imagine that startups would need the most amount of help from any venture capital partner. I believe that falls into a separate bucket of sort of being immersed in the company and helping them at strategically. Whereas, on the other side is this functional area help that we also offer. So depending on the startup, we've kind of taken any of these approaches to helping the companies.
I should have asked earlier, but are you covering hardware as well as software? You tend to focus more on software?
We don't really have a preference. All we do is what we need to see is, even if it's hardware, that there is a proof point which relates to some data that has been collected around adoption or around usage of the product in the market, and long-term usage, right? So what I mean by that is, even if it's a prototype on the hardware side, if it's an enterprise play, you would ideally have installed and run it for a few weeks or months in a customer setting. If it's on the consumer side, you have a bunch of customers that you're testing for some period of time that have been using the product and giving you feedback. While that is not to say that it doesn't help. I think because hardware is harder to build, some of these data points may not come up that easily in the early stages. And we don't have a preference for hardware or software, but we definitely want to see some sort of go-to-market models in hardware that makes sense. I think what we struggle with is people who want to build hardware for the sake of building hardware first, without actually thinking about the commercial models of how to sell it. And I think we find that companies land into a lot of trouble because of that, because it's inherently more expensive to stand up hardware companies, and it involves sort of having an inventory and having a play on the marketing side, specifically on the consumer side. And on the enterprise side, the considerations and the requirements of firms of these hardware startups are much higher. And are you in the right are you selling the right thing? Who are your buyers? What would be environment in which the hardware product would be installed? I think all that matters, and I don't think people are thinking about all that when we look at companies that we've said no to in the past. But honestly, no such preference of hardware versus software. We are open to both kinds of companies.
Yeah, and I think from an operational perspective, hardware is much more challenging, right? Because you have a lot of mistakes that you can accrue along the way, kind of unknowingly, that are going to lead to the depth of your company when you figure out that you've misengineered, you have the wrong suppliers, even you've built out your supply chain. All of these things, in the wrong locations, or your distributor base, harder to change than it is with software generally.
I think more than that, I would say my number one sort of realization in this whole thing around hardware has been the quality of the teams. I think what happens is selling hardware is not a business model, right? Most of the companies that come to us are thinking about selling. The usual go-to-market strategy involves building the hardware, putting it out in the market, selling millions of them, and then slapping a business model on top of that hardware. And what we realize is the people who actually are building the hardware may not, the team that starts the company does not really have the wherewithal to transition itself into a company that will slap a software based model on top of the millions of hardware pieces that it wants to sell in the market. And none of them have, or we see the reverse, where we see a bunch of people that have never shipped hardware before. So I think the composition of the team is what we struggle with, because we either get a complete sort of a team that has never shipped hardware but wants to ship it and therefore makes all the rookie errors along the way, as you mentioned, and it accumulates. Or we see a very solid hardware team that builds hardware for the sake of it, but is not able to transition that hardware into actually a business model on that really scales. So these are sort of the two angles that we've seen. And therefore, what we've done is we've said, look, if you want to build hardware, you need to come with a business model first. So almost think of it as, if I were to go back to a very rudimentary biking company example, you have all these shared bikes, right? If I were to see an Ofo or any of these Go Bike, Mobike, whatever that may be, if they were to start as a hardware company, they would say, I want to build the best bike there is and sell it in the market through a retail channel. But instead, they went and said, you know what, I'll build a network of bikes and I'll offer it as shared. I'll IoT enable it. So I think the business model itself is being questioned. I think if they had gone and built this perfect bike and tried to sell it in retail and hoped that at some point it'd be 1 million bikes and then build a model on top, I don't think that scales. And that's where most of the hardware startups are today, to be honest. They're in that zone where they believe they can sell the 1 million units and then they'll sort of think of a business model on top. And I don't know. I've not seen an example that has worked and scaled at that level, right? Maybe in China there is, but not outside, for sure.
Funny example, actually, one of the early employees of Mobike is a friend of mine, and I remember when they were, kind of first developing the concept for the company, and he was kind of teasing it out, and they were absolutely 100% focused on what's the business model, right? And then their first product, when they first put bikes on the street, they were pretty terrible. They were going for a particular concept, which was kind of these fixed spokes, like very heavy duty spokes, and no air in the tires and so forth. And they cost $1,000, per bike, and they were uncomfortable to ride and everything. So the product actually was pretty terrible, but they got the business model right, and that at the end is easier to fix a broken product, especially when you have capital behind it. If you have a good working business model that's scalable.
Absolutely, and I think that's less understood on the hardware side, because people believe that if they build hardware, I think it's got to do with a lot of these software ideas leaking into the hardware, to be honest. Like, I've heard of this test and learn. So people want to throw out products quickly and iterate fast, but I think some of those fall flat on their face when you think about hardware, right? Especially in the face of what Apple does and the way they operate. I think people have started putting immense pressure on themselves to get it right the first time, right? Or they throw a really, really bad product out there just to sort of using the software hypotheses of agile kind of frameworks, and they kind of pollute the market to the point where they cannot go back with a better product. So I think the business model led approach, which you mentioned, definitely de-risks some of these very rookie challenges that exist in the market.
Thanks for tuning in to another edition of the Industrial IoT Spotlight. Don't forget to follow us on Twitter at IoT ONE HQ and to check out our database of case studies on IoT1.com. If you have unique insight or a project deployment story to share, we'd love to feature you on a future edition. Write us at eric.walenza@iot1.com.